All right, let's catch up on Bitcoin. For anybody that's new here, let's cover some basics real quick. These lines drawn were not here when this was drawn. This was an idea, and there was no candles here. This was back on Sunday, the 16th of October. Everybody was talking about getting ready to come into the following week, and or maybe even that weekend, finishing up with busting through this um, sorry, busting through this diagonal line that we had here, a line of resistance for our downtrend. And what I was coming on and telling people originally was to not get too carried away when you start seeing some low time frame candles break outside this resistance. And if you're following random Twitter feeds or any random people just, telling you crazy bullish ideas, the moment you start to break that trend line on that downward trend, you're going to have people who are going to start telling you that we're going to 25,000 and that, it's time for everybody to ape in. It's time to buy. It's time to go back to the moon. What I was trying to tell you and why I jumped in to make a video, and I was trying to explain to people about caution first, especially on lower time frames, is that if you came up here and hit this line, you would most likely be rejected from it. And just because you print a few candles through it or break some wicks through it doesn't change the fact that you're in a much deeper downtrend. In a minute, we'll zoom out and go to a higher time frame, kind of go over this. But since we're on this lower time frame, let's wrap up here real quick. So if you were following different people and, maybe didn't take any of my advice, possibly you were getting ready to see these candles start poking through right around this 19,700 range, that might have made you think that it was time to buy Bitcoin. If you did, then over the course of the next 24 hours, basically, you kept getting ideas that you thought you were about to, go up to 20 plus thousand, go break the 20K level and, go to 25, and you made a great trade. If you hopefully listened to some bears or to some people that gave you a little bit more calm advice, you probably were aware of the fact that if anything, if you wanted to be taking a little bit of a risky trade, when you started poking through in these areas, this was time to start building a short. So whenever this popped up a little bit, you could have started hitting the buy button, which would have been buy to sell, or the sell button, however you want to look at it, but selling it short. You would have been starting to buy around the 19,600, 625 range. Then you could have came down here and took some profits. If those profits weren't enough for you, or vice versa, if you did take your profits, it gave you a better reload. If you didn't take your profits, it gave you a little bit better reload and to make a better position overall to sell it short. It started jumping up into the 19,000, like 725, 715, got some buys in that general range. And then over the course of the rest of the week, moving into Tuesday and Wednesday, then you really got the sell off. And by Friday, if you were still holding, hadn't taken your profits yet, you had a great option to sell and make good money, good returns on that short. If you were continuing to only look to build along, and you started buying in here, I told you that you could be selling into these resistance zones and that you would rebuy on these same levels. You would get that same buy all over again. So if you were purchasing in here, you were able to sell up here, and I told you would end up getting some buys down in this area. When I drew this line, if you go back and watch those videos or something, you'll also know that I didn't just draw this and say, oh, we go here and then we go straight down here. While I was drawing this, I was saying that the bears would use this momentum up here when you pop through to make purchases to have fuel to push this down. And that you would then most likely come down, and then this green line, which was your buy line for, purchasing a good entry, that this would be tested And if it did break, then this area in between, most likely you wouldn't find any stops. You'd most likely just go all the way down here. So that being said, it did hold, and you just got little wicks through that were super fast. I mean, this is not it, really being there for much time at all. These are, on a 15-minute candle. These are, just coming in and going right back out. So getting into this zone gave you really good buy opportunities to reload to go run this back again. When you came over here, same thing. Reload back into this zone. If you want, you could even look at it as, well, it did come down and then it went back up. That was the general idea. I wasn't saying, this was hold it to this exact number, hold it to that exact number. This was to give you the meat of the idea, basically. If you were watching the prior videos, you knew you knew then when I was drawing this then that, these were, very loosey goosey ideas, but it was giving you the general gist of what to be looking for and what to be thinking versus if you were thinking, oh, I come up here, I bounce, and I'm out of here, I'm straight to the moon. That was basically, what it was. It's not like as if when I just drew this, I said, oh, you're going to have a exact, resistance at 19,866 or something. This was, very loose terminology that I was just trying to get my point across and give you guys the general ideas of what to work with. Same thing with this down here. Told you to watch for these zones and that most likely this would come up, fake you out in this area, and then come back down this way for you to rebuy before you then started working on getting over here to where it was more compressed. And then we could talk about what the breakout was actually going to be, which is the direction we're going now to talk about what that breakout actually is now. So on to this current breakout. Let's talk about this. First, we'll talk about it on a low time frame, and then we'll zoom out and talk about all this on a higher time frame. So once the breakout happened, if you were paying attention to the videos I've given you and the instructions and just the general idea, obviously this is not financial advice. This is all for educational purposes, just meant to give you some simple learning and basic tools to work with, and just put some extra tools in your bag, basically. So if you were paying attention to this, when you came up here and started really holding this tight range, in prior videos I've told you, pay more attention to your horizontal lines than your diagonal lines of resistance. Obviously, they both matter, but once you break out, don't think that just opens up everything to the top when you're looking at, like a high time frame is what I'm getting at, and you're seeing these next levels of, are so high up. Don't think that these other resistance lines that are horizontal don't still, have purpose and don't still give you action, basically, is what I'm getting at. So as you push through this area, if you were, still paying attention to what I've given you, this gave you a lot of chances to run some scalp plays and understand what to look for. I mean, it respected these lines. It stayed within them. And when you go back, I told you, start watching your peaks, look at your prior peaks, and that you could make your own lines. I can, keep clicking them and making them for you. But the idea is for you guys to start seeing this yourselves and to not need me, basically, or not need anybody. That's why I'm making such just, easygoing random videos, not trying to really hammer anything home or make some crazy call that I'm trying to take credit for or anything like that. I'm trying to just give you guys real simple basics to work with so you can up your game and up your strategy. And if you see, even when this breakout happened and this huge quick pump, if you want to call it a huge pump nowadays since we stay in such tight ranges, this huge pump here came from the S&P 500. That's exactly what the S&P did. This is not Bitcoin taking off on its own. This is not we're back to the crypto races. This is not Bitcoin's going back to the moon, at least not yet. Not saying it's not coming, just not yet. And this is all S&P action. But even with the S&P going out and starting to break through a lot of its important ranges, Bitcoin's just moving along, staying within these ranges I gave you and going like clockwork. Even when you came up, you were rejected. And when you came down here, you found, rejection at what was once support when you didn't get it here as support, and then it became resistance. So then you came down, you found actual support on these lines I'd already given you. Come back up, hit, resistance, come back down, support. But then because the S&P, and that's what I've been trying to tell you guys, is to watch what the S&P is doing, because Bitcoin and crypto is just following the broader indexes. And your equities are what's controlling this. Your stock market, your S&P 500, your Nasdaq, that's what's controlling this. So as all of a sudden the S&P just started ripping like crazy, that's what you have here. That's what all this is. This is not, Bitcoin back to the moon just yet. This is all the S&P. But once again, when you come up, you find resistance at the levels that make sense, at the levels that, when I say zoom out and look left and figure out your history, it's still rhyming. You know what I'm saying? You've still got this history to the left, and it's still finding resistance and support, same levels, nothing's changed. And most likely this is trending back down. Try to find support, I would say probably right around 19.8. If not, then you come back to this range, which is, the top half is 19,660. But really, I'd look for something probably in the meat of this. But I really think you might actually end up right back on top of this for a minute. So, yeah. I've given you guys these lines of resistance and support to pay attention to, because things will move by levels. So that way you're not just, open-minded thinking 25K or something without realizing that you have pit stops, along the way at all these given marks. And once you get up into these two ranges, in between, after 20,700, when you start really getting up to the 21 area, I mean, this in here is really going to be its own resistance box in this 20,500 range. But if it gets through that, once again, we're not off to 25K just yet. You need to first figure out this box that runs you from about 20.8 up to 21.8, this $1,000 range. This is going to be where they want to bring you in to get liquidity. This is going to be where the market makers, the exchanges, they all have reason to get you into this box. This is max pain up in this box. And if you start seeing wicks into here, you can pretty much be certain that they're being rejected. And until you see that it just blasts through these zones, blasts through here, here, and here, like it's not here, and they're not important, comes back and starts testing on top of this and turning it into support, and not on a low time frame, on a high time frame, start printing 4-hour candles up here, then it's support, and we can talk about 23 and 25,000 and 28 to 32,000. But until that happens, what you need to be focused on is that this is market manipulation. This is meant to grab liquidity. This is meant to take your money. This is meant to grab liquidity low, grab liquidity high, and trap everybody in the same center together while they manipulate the markets. So, don't lose sight of the bigger picture, which is this is just market manipulation. This is exchanges pumping. This is the stock market being pumped for midterms. This is nothing but, in my opinion, manipulation right now until further notice. Now, if and when Bitcoin starts printing candles in this range above 25 after you first get past the 22, we can open up the idea of game on when you start printing first above this 22.8 range, 22.5, something like that. Then we can really start talking about the moon and what's open. 28, 32, is it going to hold 32? Are we going back to 45? All that kind of stuff. I'm open to all that. I love that kind of conversation. But you have major resistance at these ranges. And until we get past them, this is the game. This is the game, and they're just using it as liquidity buffers. They're using it as ranges to fake you out, and knowing that people see these things. So they think when they get through here, oh, this is happening. And they don't realize then you've got this next stop, just overhead. And you are showing confluence, at these stops most of the time. I mean, we did kind of blast through here, but even look, for a minute, you went up above it, printed candles on top of it for support and then used the momentum to take off. Came up here. Where did you actually find real resistance? You paused here for half a second, went back up, found real resistance at these lines I'm giving you guys. They're there for a reason. I want you to learn to be better at what you're doing, and I want you to help yourself. We can go into making some more videos on going to the moon and paying attention to these other levels when we get to that point. But for right now, let's stay focused on what we know we have. And that is this giant range that we've been stuck in from 18 to 25 since, June lows basically. And anything in between is just a fake out. It's just a liquidity grab. It's just them manipulating the markets, and we end up right back where we started each and every time. The last thing that we've been looking at prior and telling people with the stock market and with the Bitcoin was that the path of most pain and to grab the liquidities and set this all up for later would be, and by later I mean a bigger fall off, a bigger leg down, would be running Bitcoin back up into the ranges above 20,500 and maybe all the way up to like 22 or even 23,000 with some wicks or some low time frame candles, and then using that momentum to nuke all the way down and try to really test that support at 17,500. Until that happens, we are still just ranging, and we need to pay attention to the bigger picture, which is we're in a downward trend, we're in a bear market, things on a macroeconomic scale are only getting worse, and you need to be paying attention to the downside basically, because at this point you've still got a downward trend that you're caught in, and you need to be paying attention to the most important thing, which is capital preservation. Make these short scalp trades, take your money, put it back on your books, and wait for the next setup, something that's either too high that you want to short back down, or something that pushes down on a sell-off, and then you want to buy it to ride the momentum back up, which can happen instantaneously. But until further notice, we're still in these ranges, and right now we're pushing at the top of them. So if you're FOMO buying right now, you're buying back at the top again. And if you've been holding all year a bunch of bags that are already at the top that you're upside down on, you're making the same mistakes all over again. So just have some patience. Let's wait for the right entries if you want back in, or set up that short if you're willing to go short, although markets like this are not really for everybody for shorting. And mainly, if you're feeling extremely bullish, wait for a pullback. If you're saying, hey, I don't think that you're right, I think we're going to 25K now, then at least wait for a smart pullback. Don't buy at 20,300 or 20,005 or 6 or 7. You will get a pullback. I'm almost positive of that. You will get a pullback between tonight and tomorrow night that sells off and will show you that 19.8 or maybe even 19.5 re-entry, and then you can try to take it back to 25K. But do not buy at the top of a pump right now at 20,250 plus, 20,300, 400, whatever it is. Currently 20,313. Do not buy this. You know what I'm saying? This is you buying the top of a pump. At least wait for it to come back and retest one of these levels and then start, averaging in or something. But do not just FOMO buy after it's already taken off. And if you did set yourself up on some of the earlier buys that I'd given you prior, this is a great time to take profits. Or if you say, no, those are my positions for a long term, then fine, just hold them and wait for lows to dollar cost average even lower if they come. And if not, then you're golden. You've got the best position. You bought the bottom.